Hey there, I'm Drutter. It's January 28th, 2000. That's one thing about drutterance, is you got to keep going once you start one. That's my own rule, but anyway, it's January 28th, 2016, and this is drutterance episode number 7. Drutterance is a short, unedited, unscripted, and unprepared video. All I've done here is throw down some coins and turn the camera on. I'm sitting on the floor in my office. So the episode is on markets and why don't we understand markets? If you think that we do understand markets, I'll go into that a bit more with an example of how we don't understand markets. But my opinion is that we don't, as a whole, as a society. We don't understand what markets are. Buying, selling, investing, all those things are related to markets. We know what those things are, but we don't really understand what markets are, and we certainly don't know what makes a market free. I did a video recently on what makes a market free. It's essentially a market that is unregulated or regulated only at the very minimum. But you can click the link below to see that video. That's not what this one's about. But I think it's very important that we understand these things, because everything that we buy with, nowadays, we buy with currency. And the currency that we use, for example in Canada, is called the Canadian dollar. And that Canadian dollar is actually a commodity itself. It exists on the market and is traded just like anything else. All currencies are. And when that happens, there's opportunity for corruption. And indeed, it is corrupt. I'm not going to go into that here, but I'm just saying that every dollar that you spend is not worth what you're told it's worth. And through inflation and central banking and all these trickeries, we are using money that has been manipulated on a market against us. And we don't have the true purchasing power of a dollar anymore. Here's a $50 from Canada. Of course, this is silver, and that was a little while ago that we were able to put silver in there, because a $50 actually was something. And here's one from the States, a $50 as well. Just a couple other bits of silver. So an example of how people don't understand markets is when you hear the statement, well, first when someone says, I think silver is going to go to blank dollars, right? Okay, imagine any number there. I'm just going to say $280, whatever. You've heard probably any number between 50 to thousands, and many of those numbers are possible even through, say, hyperinflation. If the value of the dollar just plummets suddenly, then yeah, everything will appear to go up in value. Or perhaps through a longer, slower process that we could get there. Perhaps, maybe, this is a long shot, but maybe sanity will return to markets and corruption will leave the markets, and we'll be able to trade things based on how many there really are and how useful they are, how scarce something is and how useful it is. In other words, its intrinsic value. But I'm not counting on that. It doesn't matter how we get there. Say we get to $280, or say someone's talking about getting to $280 silver, which could happen. The most common response you'll get from naysayers to that theory is, but if $280 silver happened, nobody would be able to afford it, and therefore the price would suddenly drop. Now, I think a lot of people listening to this will understand why that doesn't make any sense, but the point is, we don't understand markets. The average person does not. Even people on these channels, these fairly well-educated people, often don't understand what markets are, why they're important, what a free market is, and why that's important. We just don't. And you don't need a degree for this stuff. I don't have a degree in economics. I'm pretty much self-taught, but if you do business, or if you pay attention to these things, or if you're involved in markets in some way, you're probably going to start to get a taste of it. And I'm just appalled at how poorly people understand this topic, so I think it's something that I'm going to have to talk about more here on this channel, because if silver really did get to $280 or whatever number, that is the price that the market is willing to bear. That is the price that you will buy and sell silver at. So in this hypothetical situation, silver is $280, and the person's response is, maybe, but that's not sustainable because no one can afford $280 silver. You've seen that comment, I know you have. Or if someone says gold's going to go to $8,000, and someone will say, no one will ever buy $8,000 gold. So gold may go to $8,000, but no one will be able to own any. And that, oh, for crying out loud. That's pal talk. That's what happens when you do things live, but I won't edit that out either. So that's what happens. If silver goes to 280, or if gold goes to 5,000 or whatever, that is the price. It went to that because that is what someone's willing to pay. So for someone to say no one will be willing to pay that price, they don't understand how a market happens. And a market, of course, is made up of buyers and sellers, and any potential buyers and sellers that are out there who aren't currently transacting but may be transacting. And remember that sitting on cash, or paper, or whatever you want to call it, currency, is investing. You are involved in a market. You're holding something that is going up and down in value in relation to anything else you might want to trade it for later. So we are all invested in something, unless you have nothing of anything. Okay, so let's understand markets a bit more. It's just something to talk about. You can do it from a layman's perspective, as long as you grasp the concepts and as long as you know about supply, demand, and what a free market is. These are important things. Let's keep talking about it, guys. See you again soon.